Okay, but let's get back to Bajaj Finance because I think that's the big story this morning to actually track and a whole host of elements there to look at. It's going to be on the spotlight. We'll speak with Shweta Daptardar of Elara Securities on what she makes of the numbers and everything surrounding it. But let me go across to Harsh first with the highlights and what brokerages are saying. It's not a very clear line coming in from the various reports this morning, is it, Harsh?
Well, it isn't. It's a mixed bag, but let me first talk about the numbers themselves. The inline set, this is key takeaways. First, the positives. It was an inline set of numbers. Profitability came in well. ROA was 4.5% plus, and Rajiv Jain is going to continue to be the operating leader till March 2028. That clarity at least enthused some of the analysts on the con call. So that was the one key positive. Credit costs were in line. They've fallen. They're likely to start falling starting Q3. But MSME stress, that's the new one that's crept up. Also, the housing finance business slowdown has happened. MSME will now slow down. And two-wheeler and three-wheeler book is running down. All of those to possibly contribute to a growth slowdown. That is what Citi is saying. Let's pull up what Citi is suggesting with regard to this one. They're saying that there could be MSME stress and growth risk creeps in. NIM upside and OPEX discipline is a possible cushion for something like a Bajaj Finance. Let me also talk about what Macquarie is saying. They're saying while it was an inline profitability, the lower provisioning has offset the lower other income. Stress in SME is going to result likely in a higher credit cost number going forward, and shares not factoring decline in growth guidance and higher credit costs. So couple of those negatives also creeping in along with a bunch of positives. But let's go across listening to what the management exactly had to say with regard to some of these factors.
Loan losses still grew by 26%, came in at 2.02% in terms of loan loss to average AUF. Credit costs were principally elevated in two-wheeler and three-wheeler business, which is a winding down business. That's a good news. It is the captive book has given us a lot of trouble, or continues to give us trouble. It will wind down to virtually 3,500, 4,000 by March 26. MSME business has shown some strain since February, so it's come in a little too suddenly. We've taken a whole host of actions to prune business. It's likely that both these businesses will grow a lot more slowly in the current year, starting second quarter.
So I think one of the important driver will be the auto finance vertical, which will start to become smaller and smaller quarter by quarter. That itself will start to give 5-10 basis point improvement to us on the overall loan loss to average number.
All right, Shweta Daptardar with us this morning, Vice President BFSI at Elara Securities. Shweta, very good morning to you and thank you so much for joining in. What did you make of the numbers? You know, our sort of debate this morning has been numbers are good, but the management commentary sort of dims the excitement, isn't it?
Yeah, definitely. Good morning. So Bajaj numbers were slightly mixed bag. So while there is stress that has been highlighted on MSMEs, auto, unsecured and consumer loans, so definitely that has necessitated scaling back of these portfolios. So anticipated growth has been will be softer now. So earlier, while we were estimating 24-25% AUM CAGR for next 2 years, now we have rolled it back to 22 to 23%. That's what we are seeing. Also, another thing which we need to be cognizant about is while customer franchise was growing with 18 million addition per year annual basis, management has been guiding that number now 15 to 16 million. So definitely both these points corroborate that growth is going to be slightly softer than what we saw in the historical years. Second, or on the brighter side, while the core performance have remained intact, also Mr. Rajiv Jain's return to operational and leadership role and his continuity till March 2028 definitely augur well for strategic initiatives for Bajaj Finance.
What would you do with the stock right now, Shweta, at the current levels?
Yeah, so if we look at last 6 months, the rally in stock has been pretty prominent. You know, the stock has moved from 700 to 900 plus. We believe, considering the near-term growth pressure and the asset quality woes, which has definitely exasperated and which will take a sort of weigh on earnings in the near term. So definitely stock valuations will linger at around anywhere between closer to 4x or even below that. So I think, yeah, valuations are going to be slightly range bound, and we believe in the interims, the stock should remain slightly soft.
Shweta, then how would you advise an investor to trade between a Bajaj Finance and a Bajaj Finserv as well? Because Finserv is yet to announce numbers, but what should that trade then look like according to you?
Yes, so very much Finserv would be a better pick over Bajaj Finance, because of course it's an umbrella unit wherein all the positives of Bajaj Finance also come up there, as well as insurance have been picking up gradually. So definitely at this juncture, Bajaj Finserv augurs well. Having said that, on a structural 2 to 3 year call, we still believe Bajaj Finance definitely have ample levers to their ROAs. So they have a diversified product franchise, a robust cross-sell franchise, and superior risk management that definitely will lead to steady state ROE profile, which turns out to be one of the best in the industry. So on the long haul, definitely Bajaj Finance ticks all the boxes. But yes, in the interims, Bajaj Finserv would definitely look attractive.
Okay, thank you so much, Shweta, for speaking with us this morning. You might see some softness on the stock today after the commentary that has come in.